to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up in a moment, we'll be sharing an extremely important interview involving Money Metals' own Jp Cortez, who appeared on the popular VRIC Media YouTube channel this week. JP gives the latest on Money Metals' efforts to promote sound money reforms across America, but he also has some warnings about some negative developments in Florida involving a so-called transactional gold bill. Turns out a handful of inexperienced activists and policymakers are in the process right now of imposing massive new regulations on the precious metals industry, shoving precious metals dealers, depositories, and their customers under Florida's oppressive and centrally controlled money transmitter regime. So please stick around for this conversation between Jp Cortez and Jesse Day, coming up after this week's market update. Gold has seen a pretty decent pullback here the last couple of days, mostly on optimism surrounding trade deals between the U.S. and other nations, namely Japan and with the EU. The yellow metal is off close to $100 from where it was earlier in the week and currently checks in at $3,342, good for a modest 0.6% decline week over week. As for silver, the story is similar. Silver is $1 lower than its early week high, but since last Friday's close is down a slight 0.2% to check in at $38.30 an ounce as of this Friday morning recording. The PGMs are also in negative territory as well, with platinum coming in at $1,414, off 2.2% for the week, while palladium is checking in at $1,246, also down 2.2% since last Friday's close. Surges in the gold-to-silver ratio above 100 in both March 2020 and April 2025 preceded powerful silver rallies. And if the 2020 analog holds, even more silver gains are ahead. Silver has come a long way since the bleak days of early April. That was when silver, along with most financial markets, plunged following President Donald Trump's surprising Liberation Day tariff announcement. Silver sank a staggering 21% in just 3 trading sessions, a move that was both shocking and disheartening for precious metals investors. Yet even then, we saw a glimmer of hope in the parallels of the early 2020 COVID lockdowns, which initially caused panic, but ultimately sparked a powerful silver rally to 7-year highs. But silver recently broke out above its long-standing $32 to $35 resistance zone, a ceiling that held for over a year from May 2024 to June 2025. This breakout marks what Money Metals columnist Jess Colombo says is the official start to silver's next major bull market, on track to target $50 and possibly higher in the months ahead. The long-term gold-to-silver ratio, dating back to 1915, averages 53, making the current reading of 87.3 still extremely elevated by historical standards. Using some rough math, if gold remains at its current price of $3,342 and the ratio returns to its historical average of 53, that would imply a silver price of $63.06, a remarkable gain of about 65%, and that's assuming gold doesn't rise any further. If gold continues to climb, as we expect it will, then the upside potential for silver grows even larger. Our expectation is for gold to reach at least $15,000 an ounce within the next 5 to 10 years, driven by a severe global debt crisis and an eventual financial reset. If gold does reach that figure, and the gold-to-silver ratio returns to its historical average of 53, that would imply a silver price of $283, an astounding 639% gain from current levels. Silver is certainly having a good year, but so is gold. The yellow metal was up nearly 26% through the first 6 months of 2025, ranking as the top-performing asset. This booming performance continued the momentum built in 2024, when gold surged by 27.5%. After recording 40 all-time highs in 2024, gold set another 26 all-time highs through the first 6 months of this year. In April, gold cracked the $3,500 level for the first time. It also set a record in inflation-adjusted terms. Gold outperformed every other major asset class. Developed stock markets, excluding the U.S., came in second place, rising by about 19%. Several factors drove gold's continued bull market through H1, including a weak U.S. dollar, range-bound yields with expectations of more Federal Reserve rate cuts by the end of the year, and heightened geopolitical tensions, including trade turmoil and several military conflicts. Continued central bank gold buying and more general de-dollarization also supported gold through the first half of 2025. The dollar charted its worst year since 1973. In fact, one could argue that it's not so much that the gold is going up, but that the greenback is sagging. Gold is reflecting the devaluation of the U.S. currency. There also appears to be a developing bear market in bonds. U.S. Treasuries have historically been a go-to safe haven asset. However, Treasury yields increased as bonds sold off in April at the height of geopolitical uncertainty. While the final numbers aren't in, preliminary data indicates gold demand was strong in H1, spurred by and supporting the price rally. The World Gold Council reported increased trading activity across over-the-counter markets, exchanges, and ETFs. Average trading volumes in H1 hit $329 billion per day, the highest semi-annual number on record. Gold has generally been trading sideways in a consolidation phase since April. Frequent Money Metals podcast guest Jordan Roy Byrne is a renowned technical analyst who specializes in long-term trends. He recently said it appears the yellow metal is setting up for another run higher next year. Through the second half of the year, the World Gold Council forecasts, quote, gold may move sideways with some possible upside, increasing an additional 0% to 5% in the second half, end quote. Of course, this could change based on possible economic scenarios. Well, now, without further delay, let's get right to this week's interview.
I'm going to start with you on this next question, JP, and that will be regarding central bank gold buying. The World Gold Council released their Central Bank Gold Reserve Survey 2025 last month. Here's what they wrote in one part of it. It says, similar to findings from previous surveys, central banks continue to hold favorable expectations on gold. Respondents overwhelmingly, 95%, believe that global central bank gold reserves will increase over the next 12 months. This is despite gold being at near all-time highs. What do you make of this aggressive outlook from central banks, and how much of a role do you think central bank buying plays in driving the gold price?
I think it plays a massive role, debatably the largest role. Currently, central bank gold buying is driving this increase in price. I think we've seen Jan Nieuwenhuis, who is a gold analyst for Money Metals Exchange, who has provided a depth of research showing that countries all over the world are actively increasing their holdings, which speaks to how central banks are not price sensitive. These are strategic purchases being made by the central banks that are going to happen regardless of what the market price is on any given day. Now we have on the eastern side of the world, countries like China that are quietly stockpiling gold at rates that we have not seen in a long time. They are not having to disclose their holdings either, which it makes sense. If you were stockpiling gold, it wouldn't really make sense to have to disclose some of this. And that's why that's why China has not been doing so. But from the perspective of a central bank, this makes complete sense, both in countries that are adversaries to the United States and in up-and-coming economies like Poland, like Turkey, to begin to stockpile this metal at accelerated rates. You're hedging against geopolitical risks. You're hedging against sanctions and trade wars. You're promoting stability. You're, again, hedging or protecting against inflation, against currency devaluation. All of this, the impetus, at least in the last couple of years, the reason for this, of course, in 2022, Russia's invasion of Ukraine and the subsequent sanctions that followed, all of this has driven countries and central banks into trying to get out from under the thumb of the United States government, which has an outsized power or reach over the global monetary system. Combine that with the debt problem and the inflation problem, and you can understand why countries would be actively seeking exits from the US dollar. Another point is that as we keep talking about this, you have President Trump talking about a new tariff every other week, and it seems like the United States doing less global trade. Of course, it only makes sense that these countries would then have less functional need to hold US dollars. So all of these issues are they're happening at the same time as countries all around the world and even US states are rediscovering the value of politically neutral, inflation-free money, which is what gold and silver is and has been for thousands of years. I think that's kind of the macro outlook. The micro, on an individual level, people are so desperately seeking alternatives to stores of value because the one that the government has provided and mandated upon us is broken. And you hear these stories in Argentina or Zimbabwe of people using gold, physical gold. You hear stories of internet video games, people going online and playing RuneScape or playing World of Warcraft to gain to gain video game money, because that video game money holds value better than the currency being disseminated by that government. So gold and silver, it obviously makes sense that countries and individuals would coalesce back around the greatest monetary asset that the world has seen over the course of thousands of years.
Well, JP, you've also been making efforts and scoring wins in terms of restoring gold and silver as constitutional money in the United States with the Sound Money Defense League. Could you update us on the progress you've made recently and some of the legislation that's being passed around the country? A lot of interesting things happening there. And then I'd just love to get both of your thoughts on how far this could go in terms of gold and silver truly being restored as money in the United States. Could a new gold standard operate honestly in a world where governments seem to do nothing but lie to us? We'll tackle that in a moment, but first, JP, talk about the progress the Sound Money Defense League has been making.
It has been an incredible ride for more than a decade now that we've been promoting sound money policies at the state and federal level here in the United States. This year, 2025, is the greatest sound money year in the history of our organization. And each previous year, that has been the case. There has been continued growth year over year. This year, we had more than 32 states in the United States out of 50 that introduced and considered pro-gold and silver legislation. That's more than 70% of the United States that's actively looking into ways to reintegrate gold and silver back into the state's monetary system, or to remove the disincentives into individual investors getting into buying, selling, and using precious metals. So we've worked to eliminate sales tax on purchases of precious metals all across the country. We've worked to eliminate capital gains tax. When you sell the metal, the state will charge you a tax. We've worked to eliminate that. In Wyoming, we worked with the state to establish a $10 million physical gold reserve stored in the state, held on the state's balance sheet. And we've done so many more of policies like this. So it has been an incredible year for sound money, and we expect this trend to continue because inflation isn't going away, and these questions about money that haven't been asked or really considered in decades are starting to become dinner table conversations about why isn't my money holding its value? Why is it that just a couple of years ago I was able to buy 40% more groceries than I am today? Why can I no longer afford a home? The answer to all of these questions is the Federal Reserve. This is intentional policy, and states don't have to sit by and watch as the federal government and the Federal Reserve destroy the currency of our country. So it's been a very exciting time. We expect this trend to continue. And it's the success over the last 12 years in passing all of these projects that have created a lot of momentum. And honestly, what we've seen recently is that this has brought in a lot of new helpers. And unfortunately, some of these helpers might not be quite as readily available or really have a good sense of how to craft sound money legislation. In Florida, y'all may have heard, there was recently news about this great bill that was signed into law in Florida. Ron DeSantis came out, said that gold and silver can be used transactionally. And this is an exercise in making sure that you read the bills, because not all sound money bills are built equally. This bill that passed in Florida is a disaster. I've been in this space for more than a decade. I've read literally every single piece of legislation that pertains to this that has been even considered by any state in the country. And I can tell you, this is the most catastrophic thing I've ever seen enacted by a state. This creates an entirely new regulatory structure that brings everyone in the gold and silver business, the storage business, or any related industry under the money services transmitters laws that creates whole new regulation and reporting requirements and all sorts of things. This is a net negative for sound money. These systems that make it easier for the institutions that gold and silver are supposed to protect against, and giving them an avenue with which to weaponize and surveil and do more. So while we have some allies who are maybe a little misguided, on the other hand, for example, I was on an excellent webinar with Catherine Austin Fitz and the Solari Report team just last week, where she was hitting on multiple times the importance of focusing our efforts. State legislation is so hard. It is incredibly hard to get legislation introduced, much less passed. The legislators that are in place to decide and make decisions based on these issues oftentimes have no background in what they're trying to govern. So it's very important that our message be focused on first principles, on doing things that actually functionally help people readopt their own gold standard. That's removing taxes, removing friction, removing reporting requirements, not creating, as Catherine said, not creating the digital system even before you've created the analog one. So while there is so much excitement in this space, we also have to be diligent to making sure that we are supporting and backing legislation that actually promotes sound money, not something that is easily weaponized and ripe for capture by the same people who are surveilling on the current financial system.
Yeah, very well said. And just quickly, and then I'll jump over to Peter here, the concept of reintroducing gold and silver as actual transactional currency, as they're attempted to do in Florida, but not very well, as you mentioned. Do you think such a world could exist within our lifetimes where we have some sort of sound money architecture that works in the US? Because obviously the forces in government and the people pulling the levers of power behind them would do anything to stop that from happening, probably including killing a bunch of people. They could care less. So how, in that sort of environment where the government is just as dishonest and crooked and corrupt as they come at the federal level, and the people behind them who we don't even know about, how is it possible to ever enact some sort of sound money system within society itself?
The good thing is that these systems already exist. While I'm talking about the legislative snafu, the fiasco that's happening there in Florida on the legislative level, these industries and these companies, if you want to use transactional gold, you can already do that without involving the state into a private-public partnership with only a handful of vendors. So if individuals wanted to readopt their own gold standard and use this today, they are able to do so without getting the state involved at all. And that might be the most important thing. We don't need a top-down monetary system where the government has created these machinations and this great infrastructure to make sure that it works well. We need bottom-up money. We need the government to get the hell out of the way rather than imposing some complex and likely fraught with errors system. So I think that's the answer. I personally have not seen any evidence that people even want to use gold and silver transactionally. Gresham's law is a real thing, and the companies that are in this space have to contend with that. I am hopeful that someday, if the need ever comes to spend your gold and silver, that infrastructure exists, and fortunately it does. But today, there is little need or desire or impetus for doing so when the federal government and the state government and vendors are willing to accept devaluing paper notes in exchange rather than wanting your actual real money.
Good stuff there from JP and Jesse Day, and I hope you enjoyed that interview. Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. Check out the Money Metals Midweek Memo podcast as well. To listen to any of our audio programs, just go to moneymetals.com/podcast or find them on places like Apple Podcasts, Spotify, or other podcast platforms. And as a big help to us, we would ask that you please like, subscribe, download, and rate our podcast. Doing so helps us extend the reach of this material. Until next time, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a wonderful weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.